evening guys and welcome back. We had a fantastic trading week in gold, but now the price reached a significant and important level where the decision have to be made by the market participants. So if you get stuck and have no idea what to do next, stay tuned and make sure you watch the whole video, because I'm going to give you a step-by-step explanation and breakdown on what to expect on gold next week, what things to look out for, and more importantly, how to trade these things. So let's start the analysis by recapping what happened this week on gold. So if you go back into previous week's video, you can see that I expected or forecasted that the price will follow this ascending trend line, forming a bullish market structure by creating high highs and high lows until it reaches the 1820, 1824 area. So if you go back to the original chart, you can see that the price did follow the ascending trend line. It did create high highs and high lows, but it didn't reach the 1820 area. Now I appreciate the comments guys, but you know the markets change day to day or hour to hour, so it's difficult to make a new video and give you a heads up that okay, the price didn't reach the 1820 area because the pivot point came early from the 1816 area. But what I did is I obviously posted in the members group to my students that okay, we have a possible double top scenario where the price will sharply reverse to the downside. And this time what I did is I posted into the public Telegram group chat where you have free access to this group. Sometimes I do post setups and videos and you know, all promotional stuff. And I posted this chart where you can see that the price broke through this ascending trend line on Tuesday. It broke through and then immediately retested it, and this is what a perfect entry point. But even if you missed it, by definition, by textbook definition, this is a double top because the price broke through the trend line, came back to retest it. If you look left, there's the support and resistance, so it was an obvious setup, and I posted it into the public Telegram group chat. I posted it on Instagram and posted it to the members area. So if you missed this, it's only your fault because the information is right there. I was transparent and I posted it to almost everywhere. Apart from YouTube, because it's difficult to make new videos every single day. I try to make a midweek analysis from now on, and hopefully you guys who watch YouTube can catch these trades too. Now let's go back to the chart and see what happened. So you can see that the price, as explained, so this was the double top. The price broke through the trend line, came back to retest it, and then it created a 1000 pip drop, or $100, or 10,000 points. So if we zoom in for a second, let's see what we can find here. You see that the price sharply dropped from 1808 down to 1845 and then bounced back, creating a high, then a high, but it failed to break the market structure because generally, well, you can ignore this because this was just a spike. But if you look at the bigger picture, you can see that the market structure is bearish because the price created lower highs and lower lows. And you can draw your second trend line as you would in a bearish market direction, from swing high to swing low. So if you go back to the candle chart, you can see that the price did follow this bearish market structure. We had a bearish pattern as well, and also other confluences such as the Fibonacci. So the price created lower highs and lower lows, and then you can see that this is a mini head and shoulders, and as soon as it created the right shoulder, the price just melted. And since that, my first take profit level was 1785, and as soon as it hit my take profit level, I was just out in the market because I went away on Wednesday. So if I'm going away, there's no trading for me. This is one of my #1 rule, to try to separate the personal life from trading. So if I'm with family or friends, I don't trade at all and close all my positions. But I was glad to see that students in the private members area did catch all of this massive drop down to the 1715 level. And you can see if you zoom in that we have another trend line which you can draw from swing high to swing low, and the price did respect the trend line. And also you can see the previous support and resistance levels, how they became resistance, so the support became a resistance. So it was a textbook market structure, guys, because you had the price respected the descending trend lines, as well as creating a bearish market structure by making lower highs and lower lows, as well as respecting the support and resistance level. So this is exactly the market you want to trade. And even if you go down to a even smaller time frame, it's more obvious that's what's happening right here. You see that the price descending, creating bearish market patterns, lower lows and lower highs, and respecting trend lines, and we have support and resistance. So even if you miss the shout out in the public Telegram group or Instagram, even if you look at the chart, you could trade this. If you don't know how to trade this, well, send me a message and I explain, because this is the simplest thing to trade. So after the price created lower highs and lower lows, from the 1760-65 area, it just melted all the way down to the 1750. Now the 1765 area right here was a key area I marked in the previous video, and I said if the price breaks below this level, then we can expect some sharp moves to the downside. And look what happened, just melted all the way down to 1760. And okay, we analyzed what happened this week, but you're here because you want to find out what to do next and how to trade next week on the market. So let me explain. Let's start with looking at the technical analysis and the chart of what's happening with gold. So you can see that the price dropped sharply from 1815 all the way down to 1715, which was $100. It's massive, it's a huge drop. So it's over, 1,000 pips. And as soon as the price stepped into 1718, 1717, it just bounced back, and we can see on a smaller time frame a clear rejection. Now this is a textbook rejection because you have a massive red candle, then you have this hammer or doji or whatever it's called, and then you have the blue candle or green candle appeared straight away. So what's happening? Why did the price reject the 1717 area? So one thing we have to do is go back to the daily time frame and look at the bigger picture. And the number one thing which all of you traders should do is look left. And what do you see on the chart? You can see that there's a consolidation area right here, which I marked with a blue box. As soon as the price broke out from this consolidation area, then it just skyrocketed and made, I think, 3,100 pip rally. Yeah, 3,100, 31,000 points, which is huge. So what the consolidation area tells me that there's a lot of pressure building up and a lot of interest in there. And by the way, I teach the consolidation theory in my course, which you can find on alphafx.hu. And if you go to the purchase tab, you can find everything about my course. If you have any questions, click on the contact tab, send me an email or write me a direct message on Telegram. So let's go back to the chart. So I teach the consolidation theory and I explain what's happening in this box and also to how to spot this level. So in the course I explain the tools you need to catch this move right here. Okay, enough what's happened in the past. Let's see what we can expect in the future and what to do next week. So on the 4-hour chart we can see that this drop was really steep, a low angle drop. So usually what I teach to students is to try to draw a trend line, and as soon as the price breaks the trend line, wait for the retest, and then you're good to go to the upside. But because now we have this really steep trend line, so you could draw something like this. Let me just delete. It's difficult to draw in these market conditions, but it's still valid. So what I would expect on gold to look out for is the price to break, well, this trend line, or at least form a market structure. So exactly the same setup as last week. We want the price to create a market structure, which is a confirmation for us to enter into a trade. So you would look for a bullish market structure when the price breaks to the upside, breaks the trend line, comes back to retest it, and then forming a bullish market structure, creating high highs and high lows. It's simple as that, guys. Or if you are more conservative and more careful because you manage risk, there is a possibility that the price will create a inverse head and shoulder, something like this. So you have the head, left shoulder, and possibility right shoulder. But for this to happen, we still need the price to break this market structure, break the trend line all the way to the upside, and create the right shoulder before it makes its way to the upside. So that's the second possibility. For me, I have several confirmations. One of them was the consolidation theory, the other one was the Fibonacci, and also some key levels which pointed to this level, that this would be a good entry point. Now, obviously, because I was away, I couldn't enter into trade, but if I was to enter, these are the kind of things I would look for: the break of the trend line, or the break, more importantly, the break of the market structure. So the price to break the previous low, which was this, come back to retest it before it makes its way to the upside. So simple as that, guys. Now we talked about the technical side of the part. Let's look at the fundamentals and what we can expect in the next coming weeks or even months. On the fundamental side, let's look into some basic economics and find out what drives the gold prices. If you open up any economic textbook, you can find that the price of gold is moved by a combination of three things: supply, demand, and investor behavior. That seems simple enough and satisfying in a textbook, yet the way those factors work together is sometimes counterintuitive. For instance, many investors think of gold as an inflation hedge. I also received some comments in my previous videos where people referencing these facts. That has some common sense and plausibility if you compare gold with paper money, which loses its value as more is printed. So if the supply of a good goes up, demand should go down, therefore the price of that asset should plummet. While the supply of gold is relatively constant. So the problem with that theory is that gold mining doesn't add much supply from year to year. So we can ignore the supply, and here's the question: what is the true mover of the gold prices then? On the demand side, in the previous video, we talked about some important factors which are going to change fundamentally the gold market as well as the gold prices. Namely, the most important was the recommendation made by the Bank of International Settlement, which says that banks will no longer have to apply the 50% haircut calculation on any physical gold reserves they hold. So in simple terms, this means that any physical gold in their books is going to be worth 50% more in accounting terms. So logically, all the central banks should buy gold because it's going to be worth 50% more. Despite gold is not an interest-bearing asset, this is a really good opportunity to wipe out massive amounts of debt from their books, even if it just, in accountancy and in booking wise, it's still a good opportunity, and also to comply better with the Basel III recommendation. So gold in Basel III regulation is going to move from illiquid category to a liquid one, where the banks can consider it at its full amount and its full value instead of applying a 50% haircut. So logically that would increase demand, right? And we looked at the previous charts in last week's video, that how some of the countries which have geopolitical tensions and even crisis are racking up their gold reserves. And naturally, I would think that this is going to be followed by the more developed countries, because the Basel III is only crystallized a few months ago or last year, and it doesn't have much clear deadlines. We know that there's a deadline in this March, this June, and somewhere in 2022. But the central banks have to step up their game, and they have to prepare for the Basel III regulation. And if they don't want to miss out, they have to rack up huge amounts of gold as soon as possible. And because if you look at the chart again, so let's go back on the daily chart, you can see that the price is currently at a really good price. So if you go to the weekly chart, you see that we reached this support and resistance level right here, and it is a really good price. So I would say the banks, the central banks, if they start purchasing here, they can buy at a really good discount, because compared to previous months, we can see almost a 10-15% discount, or even 20% discount. Or if you look at last year, August, the price is now discounted 30% to the previous price back in 2020, August. So if the central banks start to purchase here, then we could see some good moves to the upside. And for this to happen, I need this trend line to be broken. And when this trend line breaks, that will tell me that yes, central banks did stock up on gold. And if we go down to lower time frame, what to do next is we can draw a smaller trend line right here. So if this trend line breaks to the upside, the price will come back to retest it. And this is where you want to enter into a safe trade, because you know the price might come back to retest this area right here, so the 1720 or even the 1715. But if this trend line breaks, that is a confirmation for me that there will be some price and trend reversals. So this is what I'm going to wait for on a smaller time frame, this trend line to break. Now you can enter even here into a long position, but make sure you manage your stop loss and your risk actively. Now remember that this video is not a financial advice, and you should be responsible for your own financial decisions. So if you were able to catch the trade from the 1717, well done, excellent position, and you can use a smaller stop loss. But if you're only entering somewhere here because you missed the trade, make sure you use a bigger stop loss, because we can expect the price to spike back down and retest the 1770 level. And if you want to be really super conservative, make sure to wait this trend line to be broken to the upside and wait for a retest of this trend line or the support and resistance level, and also use a bit wider stop loss. Now, if my theory is true, then we can expect some sharp moves to the upside. And if you look back to the weekly chart, yes, we can easily see the price coming back to 1844 or even higher. But let's see how this support and resistance hold for now, and when price reaches the 1800 level again, I'm going to make a new video and tell you what to do next. So thank you guys so much for watching and listening, and if you like the video, make sure you hit the like button, subscribe to the channel, and stay safe for next week. Make sure you never risk anything more than 2 to 3% and use a stop loss. Goodbye.